President Trump is taking credit, telling first responders in Florida yesterday that his policies and deregulation push are growing the economy. If the markets continue at this pace through the middle of next year, it will be the longest bull market since the late 1920s. But we know what happened after that. While there's no expectation a Great Depression is coming, bull markets don't last forever. So just what should we expect in the new year? Well, joining us tonight with their thoughts are two experienced market watchers and financial advisors, and they are Nancy Coutu, co-founder of Money Managers Financial Group, which specializes in retirement planning, and Mark Horner, founder of Fairhaven Wealth Management. Thank you both for being here this evening. So Nancy Coutu, to what or who do we owe these very robust financial markets over this last year?
Well, even though our president would like to take full credit, certainly I don't think he started the movement, which started back in 2008, 2009, more or less. It's been a slow, steady climb. We have come out of a lot of horrible financial things. Certainly 2015, 2016 were very lackluster years because we were in the elections, and pretty much investors don't like uncertainty. And then when we did have an election, yes, the market did soar, but I think it was just because people were like, finally, now we know what we have, and now we can move and plan and go forward.
So Mark Horner, there is some optimism that has come with this presidency and some of his policies. Is that correct?
I think that is correct, and I think the bull market since 2009, as Nancy mentioned, I think it's followed a rather classic pattern of a bull market, with the early run of a bull market and then a little bit of a breather before that third leg of a bull market continues. And I think we've just moved into that leg. You mentioned the word optimism. There's a familiar phrase among investment people that bull markets are born in pessimism. They grow in skepticism, mature in optimism, and then ultimately die in euphoria. So I think we've transitioned from that skepticism phase into an optimistic phase.
So what policies, either that came under the Obama administration or that have been implemented within the last 10 months of the Trump presidency, have resulted in the markets feeling this optimism and stocks skyrocketing? Nancy?
Well, for one, the restrictions and laws have been rolled back, which immediately gives more freedom, gives the business environment stronger potential to go forward.
So you're talking about deregulation.
So deregulation is one of them. The promise of lower taxes, which encourages a corporation to give back, as in build their structure, hire people, go forward, and at the same time bringing the workforce into play. So all of this is just a boon for our economy. Corporate earnings are really good this year. Corporate earnings usually do drive this kind of movement. Dividends follow in driving the corporate earnings. We've had just a wonderful year of both.
So what regulations specifically, Mark Horner, can you cite any that you think have propelled these corporate earnings and therefore the stock markets to rise?
You know, I think that political moves, one way or another, have less to do with market reaction, because it's just been true through the course of our economy that we've had very strong markets under Democratic leadership and strong markets under Republican leadership, and likewise and vice versa. I think the political issues just tend to offset themselves, that in Democratic controlled regimes, typically Republican supporters are not all that supportive of what's going on in the Democratic world, and likewise in Republican regimes. So I think it's got more to do with the strength and vitality of the U.S. economy, and businesses able to grow their businesses regardless of the environment, growing both their revenues and profitability. That, I think, is really what drives stock market performance more than what goes on in Washington.
Well, you bring up the word environment and making it friendly for companies and corporations. We have this new tax bill, and we saw folks lining up to pay their property taxes in advance. So is it going to generate the jobs, now that the corporate rate has dropped significantly, that the Republicans say it will?
My guess is that it will. Yes, I think that it might generate jobs as well as free up a little extra capital for companies to invest in their own businesses, in perhaps purchasing more inventory, investing in capital expenditures. So yes, I think the tax plan will be helpful for the economy.
Nancy, do you agree?
I totally agree. And what the general population doesn't understand is the majority of employers are not the big, rich firms that people identify with. 60% of the employers in this country are small companies like my own. A small company owner, if they get a tax break, they have extra money to hire the person they were holding back on, to give raises to their people that they might not have given raises before, certainly to build their own technology, to buy equipment. And what people don't also see in this whole big picture is, yes, we have a $1.5 billion tax cut. Where are we going to get that money? When small employers, which again are 60%, are hiring new people, those people are going to be paying income taxes. So we get those on the income tax rolls, and now we have money coming back into the government as well.
Are you going to be hiring then?
Absolutely.
How many people? Should they apply?
I better restrict and hold that back.
Mark, are you going to be hiring at your company as well?
Absolutely, absolutely. We're intending on growing.
So is this the trickle-down economy that we've heard of before, that came under President Reagan, but apparently did not trickle down to a whole lot of people? Is it going to work this time? Is that what you're suggesting?
I am optimistic. I think capital is best put to use in the hands of the private industry. So I think the more that the government can, it's not really give back, because they should maybe take in the first place, but the more capital that the government can leave in the private sector, I think that's where it's most efficiently spent.
And also, I'm sorry, I was going to say, what I would add to that is, my big hope is we have billions of dollars that are being held overseas by U.S. corporations, and they didn't want to bring it back into this country and pay 35% tax on it. Now that the tax rate is down to 21%, I think it will encourage them to bring that money here.
Do you really think that that will happen, though? Because
Absolutely.
These large corporations have these investments, and it have them offshore, and they can make money and not report a lot of this.
The biggest profit center, for example, of Apple is China, and there's a lot of U.S. dollars, profits sitting in China. If they would just bring back a portion of that, they would still maintain that market overseas, but bring the profits back here to build and expand and develop their own technology. And that's what we're hopeful for.
And I agree with that. I think capital flow is where it's most efficiently used, and to make the U.S. economy more attractive relative to other economies, I think that capital is going to flow back. And some estimates are saying just that bill alone that Nancy's referencing could add 10% to already strong corporate earnings in the stock market.
Again, getting that tax money back into the flow that everybody's worried about. How are we going to pay for this? I think just by natural progression, we'll be able to fulfill that much faster than the massive spendings we had in years past.
Where do you see storm clouds, if any, on the horizon? Because as I mentioned at the top, bull markets don't last forever. They haven't in the past. Maybe this will be.
People have to remember that.
Maybe this will be the exception. But where do you see a possible?
Well, several. One is we still have the conflict with North Korea and Iran. Now we have midterm elections. If Democrats come in, they can slow the progress of, especially the North American Trade Act that Trump is trying to do with other countries, again, to spur our economy and to keep more money inside of our country. Not to mention, if the companies themselves see that the potential is there, they're going to hold back. They're going to hold back money instead of investing it. And last but not least, we have a new chairman for the Fed,
Federal Reserve
and
coming in.
New person increases interest rates too quickly, it could really slow down our.
Well, Mark Warner, what about that new Fed chair?
So I think that's the biggest risk that I'm concerned about. No recession in the history of the United States has not been preceded by a steep increase in interest rates by the Fed. That has never happened before. So the Fed is already signaling that we might expect 3 rate increases into 2018. If those might be in 25 basis points or quarter of a point increments. If that changes meaningfully, to the upside. I think that's the biggest risk to continued economic growth.
Would you like to have seen Janet Yellen continue and be reappointed? Do you think that she could have steered it through this economy, however good it is or however perilous it might be?
I appreciated the job that Janet Yellen did. I agree. I agree.
So was this a misstep by the president just to get somebody that he nominated in there?
Might have been political again.
I think that remains to be seen.
Yeah.
I think that remains to be seen.
So, Nancy, as you say, the midterms are coming up, and there are a lot of ancillary things going on with this administration that have nothing to do with the economy. It has a lot to do with tweets most of the time, and we're already seeing some backlash from the electorate. So, is Mr. Trump, who's taking credit for this booming economy, might have to face other issues because of the way the administration is going.
Absolutely.
Including the investigation.
I think that if more Democrats are brought in, it's certainly going to slow his progress. However, his own party has pushed back. So, you know, he's got a lot of resistance on a lot of different levels, and he's headstrong and pushes forward. I think it might slow him, but it certainly won't stop him.
So let's get to some advice that you've given your clients this year, and we're asking it for free, so that's why we invited you here. So Mark Horner, in terms of managing your wealth or lack thereof in 2018, what tips can you give us?
So there's been a meaningful leadership change on the equity side of the balance sheet here this year, and that is the U.S. has given up the lead, which it's had since 2009, to the international markets. So that's the first time that that's happened in the last 8 years. And we've had conversations over the last 2 or 3 years with clients where they've said, "Hey, why do we own international stuff? Clearly, the U.S. is the place to be." And we found out this year that that's not always the case. Leadership between U.S. and international tends to move. It doesn't tend to flip-flop from one year to the next. Those trends tend to move and last for a few years. So I would say most investors would probably be well served to go back and look at their asset allocation and make sure that they've got an adequate exposure to international and emerging markets. And that's true on both the equity and bond side of their portfolios.
Nancy Coutu?
Rebalance. So I think that's kind of what Mark is saying also. People need to rebalance. Just because they made a lot of money in one piece, and I'm relating to their 401k, which is the majority of the population, you need to rebalance. So if you made a lot of money in plan A, take some of that off and put it to someplace safer, because you want to take profits out. So typically a 401k has a stable value fund. Get some profit out now and put it into that stable value. It won't make a lot of money, but it won't lose money. And then last but not least, is we're doing a lot of in-service distributions. If their 401k allows them to take it out and put it to guarantees.
Nancy Coutu and Mark Horner, thank you very much for being here. Happy New Year, and we'll see you at
Thank
2018.
you very much.
Thank you so much.
Appreciate it. Happy